Hi traders, welcome to our weekly top-down analysis. On here, I share my trading setup, so stay tuned for your trading setup, such as your entry prices, stop loss levels, and take profit levels. So on this channel, I trade the smart money concept strategy, and stay tuned. Now, for this episode, we are beginning analyzing step index, and as always, we begin analyzing from the weekly time frame. If we can see prices forming lower lows and lower highs, therefore our buyers for step index, we are going to be looking for selling opportunities. And then marking our key zones, we have a supply up there. We have a supply zone up there. And then down here, we have a demand that is forming where price is currently reacting. However, the overall bias on step index is bearish. I always look for selling opportunities because if you can minimize, you can see that step index has been pretty much selling from 2019. Therefore, if you want to get high probability trades on step index, always look for selling setups. All right, moving on to the daily time frame. From the daily time frame, we have a break of structure right there. And then price reacted from that order block. And it's pushing. Now, if we see here, we have a break of structure here. So we have a break of structure. Have a break of structure. That's pretty much it from the daily time frame. Heading over to the 4 hours, we'll see the price action clearly. So price is reacting from this 4-hour order block. So we have a break of structure here. And then price is pushing from this order block. If we are to zoom in, we have a break of structure right there, but I'm seeing that as inducement level. Now we have a recent break of structure. So we have a break of structure, and then the other block which caused the break of structure, it is that other block where price is reacting from the 4 hours time frame. Heading over to the 1 hour time frame. Heading over to the 1 hour time frame. Heading over to the 1 hour time frame, we have price reacting from this order block. Now we have our swing low here. Heading over to the M30. So from the M30, we have a break of structure right there. Break of structure, and then our order block is at that level. Block is at that level. And then we have the fair value gap right there. And for step index, from my back testing results, I've seen that step index likes to react from the fair value gap. Hence, when I place my traps, I always look for entries at the FVG. And then we have this break of structure. We have that break of structure. So just adjusting my order block. And then we have this internal break of structure right there. And then we have that order block where price is currently reacting. And then we have that FVG where price has stepped in both the FVG, and the order block. So for step index, price is already at my area of interest, and I can see reasons to sell. Heading over to the M15. All right, price has reacted at both the FVG and my order block. Therefore, for step index, it's going to be an instant execution. So go ahead and place a sell on step index with your current price at the with your entry price at the current market price, and then your stop loss slightly above the order block, and then your take profit levels. The first take profit is going to be at 7790.4, second take profit at 7765.8, and always apply proper risk management. So I'm taking this trade because I can see price has broken a structure and then it went back to go and mitigate my order block by forming a bearish engulfing. That is a bearish engulfing. That is a confirmation candlestick pattern to indicate the sellers are ready to step into the market. Therefore, I'm anticipating for price to push down from there as all my confluences are intact. So that's pretty much it on step index. I'm going to currently place this trade. I'm going to use my phone. Now heading over to volatility 75. From the weekly time frame, we can see that VIX 75 has been pretty much selling since 2022. Therefore, the sellers are in control of this market. Therefore, I'm going to be looking for selling opportunities to the downside. Marking my areas of interest, we have that supply zone. That supply zone where the buyers had control, and then a doji formed, and then a confirmation candle that is a bearish engulfing to indicate the sellers are indeed into this market, and we are going to be looking for selling opportunities until that level there. Now heading over to the daily time frame. From the daily time frame, we can see that that was the last break of structure. Last break of structure to the upside before price tapped into that supply zone. And then we have a change of character here to indicate this uptrend is over now. The sellers are stepping into the market because structure is now changing. We're forming higher highs and higher lows, and then now we are forming lower lows and lower highs. So that is a change of character. And then when a change of character happens, price will always go back and tap into the origin, which caused the change of character. In this case, that is the order block. That is the order block, and we are getting a push to the downside. And we have a swing low here. That can be a point of taking profit. And then we have a break of structure right there. We have a break of structure, and then the order block which caused the break of structure. It is that order block from the daily time frame. So that's pretty much it from the daily time frame. Heading over to the 4 hours time frame. From the 4 hours time frame, we have this break of structure, and then the order block which caused the break of structure. It is that order block right there from the daily time frame. And then for step index, for my back testing result, it also likes to react from the FVG. Therefore, for step index, I always place my entries at the fair value gap. So price has stepped into the FVG, and we are getting a push to the downside, and price, it formed a tweezer top. That is a tweezer top to indicate it's a reversal candlestick pattern to indicate the sellers are indeed in control of this market and they're ready to push down. And we have a swing low that can act as our take profit point. Heading over to the 1 hour time frame. From the 1 hour time frame, adjusting our order block is going to be at that level. It's going to be at that level. As you can see, price stepped into our order block and we are pushing down. If we head over to the M30, 30, as we can see, price is pushing down from that FVG. We see that is the general break of structure. So since this trade is already happening, if we wanna get into this trade, we can see there is a break of structure here. We can see that there is a break of structure right there, and our order block at that point, and then our FVG. That is our fair value gap. So we have our order block, and our FVG. So this is a trade I'm going to give the coordinates because everything is aligning. Price has broken structure. It went back into going depth into this FVG and we are pushing down. However, we also formed this new break of structure. That is a chance for us to get in. So you can go ahead and place a sell limit. Yes, you can go ahead and place a sell limit on volatility 75. Go ahead and place a sell limit on VIX 75 with your entry price at 48464.87, stop loss at 49821.66, and your first take profit at 46148.54, and always apply proper risk management. Therefore, I'm anticipating for price to go and mitigate my fair value gap or order block and then give me a push to the downside because the overall trend on VIX 75 is bearish. So that is what I'm anticipating for VIX 75. Heading over to volatility 100. From the weekly time frame, we can see that price is forming lower lows and lower highs. Therefore, our bias is very clear. We are going to be looking for selling opportunities. Marking our key zones. We have a supply. We have a supply right there. And then down here, we have a support or a demand level. Therefore, our bias, I said we are going to be looking for selling opportunities until that level because price is in a downtrend. Heading over to the daily time frame. Okay. From the daily time frame, price is pushing from that supply. However, I cannot see a break of structure from the daily time frame. Therefore, I'm just going ahead to the 4 hours where the price action or the levels are much clearer. Therefore, we have that is the last break of structure. Last break of structure to the upside before price stepped into the supply, and then we had a change of character here where the sellers broke structure, change of character to indicate the sellers are ready to step into the market. And then whenever we have a change of character, price will always go back to go and mitigate the order block, which caused the change of character. In that case, that order block where price stepped in, and we are getting a push. And we are getting a push to the downside. And we have a swing low there, a level we can use as our take profit level. Also this low. Now, we have this break of structure to indicate that the sellers are still breaking structures to the downside. Indeed, we are in a downtrend. We have a break of structure and the order block, which caused the break of structure. It is that order block from the 4-hour time frame. That order block heading over to the 1 hour. From the 1 hour, we have the order block. And we have that internal break of structure. And for volatility 101S, we always place our entries at the FVG of the internal break of structure, which is that fair value gap there. And then heading over to the M30, adjusting our levels to the M30, our order block will be there. And then our FVG. And then this, our general break of structure, will be at that level. And then I'm seeing these levels as liquidity or inducement levels that price has to sweep to go and tap into my FVG or order block. Heading over to the to my entry time frame, which is the M15. My internal break of structure, adjusting it, it will now be there. And then we have this liquidity that is sitting here. It's liquidity because we have this break of structure here. As long as price is forming other break of structures, as long as it did not mitigate the first order block or FVG as it was moving down, then whatever order blocks price creates down here, this is just inducement or liquidity levels that price has to clear to go and tap into the original or the first order block for the first break of structure. So these levels, all these levels that price is leaving behind here, this is just liquidity according to my strategy. Therefore, I can now go ahead and place my coordinates. Always I place it at the FVG. Now you can go ahead and place place a sell limit on volatility 100 with your entry price at 620.53, stop loss at 633.39, and your first take profit at 583.03, and your second take profit at 564.68, and always apply proper risk management. Therefore, I am anticipating that price will go and sweep the liquidity that is it's forming here, take me in, and then I'll get a move to the downside because the overall bias on volatility 100 is bearish. All right, traders, that's it for this episode. If you did find the episode helpful, like the videos, share it with your friends and family, those ones who are interested in trading, and have a profitable trading week. See you next week.